With United States inflation data set to drop Wednesday morning at 8:30 Eastern Time, right after last week's weak job numbers showed unexpected economic cooling, gold surging toward record highs, and Bitcoin trapped under key resistance despite massive institutional buying, traders are facing one of the most explosive risk environments of the month. Welcome to CloseOption Trading Desk. Today, we are breaking down what is actually happening across 4 critical market setups, along with exact risk management rules to protect your capital. First up, the United States CPI report drops Wednesday morning at 8:30 Eastern Time, right after last week's weak job numbers showed unexpected economic cooling. Because employment figures came in lower by 23,000 jobs, most market participants expect a soft inflation reading, with headline numbers around 0.1% month over month. As a result, retail traders are aggressively buying risk assets, expecting the Federal Reserve to cut interest rates. Here is the trap. When everyone is already positioned for good news, even a minor inflation spike, driven by rising oil prices or stubborn housing costs, can spark a massive wave of forced liquidations. Now, how should you manage your risk around a major CPI release? Enforce the clear the air rule. Do not open new leveraged trades within 2 hours of a major economic release. If you currently hold open positions, cut your position size in half or widen your stop losses to absorb initial market volatility before the true trend establishes itself. Moving to our second topic, headlines recently reported that MicroStrategy, ticker symbol MSTR, sold another 1,690 Bitcoin, worth roughly $109 million. Critics claim this breaks Michael Saylor's famous never sell pledge. However, looking deeper reveals simple corporate treasury management. MicroStrategy sold a small fraction of its holdings to defend its preferred share structure, ticker STRC, while raising its United States dollar cash reserve to $4.65 billion. They are protecting dividend obligations and debt service, not dumping out of panic. When high-profile corporate news breaks, here is how to protect your trading account. Look past the headline. Never execute trades based on automated news alerts alone. When a major institution sells an asset, check why they sold and what percentage of their total portfolio it represents. A routine balance sheet adjustment is completely different from an institutional exit. Our third story focuses on precious metals versus crypto. Gold has surged vertically toward $4,400 per ounce, propelled by central bank interest rate cut expectations and escalating geopolitical tension near the Strait of Hormuz. Meanwhile, Bitcoin remains unable to cross the $65,000 mark. While crypto investors view Bitcoin as digital gold, traditional financial markets still default to physical gold during international conflicts. Right now, gold is serving as the primary safe haven asset, while Bitcoin continues to trade like a high-beta technology stock. How do you safely trade a parabolic move like this without getting burned? Never chase a vertical price movement into heavy technical resistance. Buying gold at all-time highs due to fear of missing out dramatically increases your downside risk. Instead of buying at peak extension, wait for a pullback to key support levels or allocate capital to assets that have not yet broken out. Finally, spot Bitcoin ETFs just recorded their strongest buying week since April, pulling in over $850 million in net inflows, heavily led by BlackRock's IBIT fund. Despite this overwhelming buying pressure, Bitcoin's price refuses to break above $65,000. This environment is known as market absorption. Large sellers, miners, and profit takers are placing heavy sell orders around $65,000, absorbing all incoming institutional demand. Until that selling pressure is completely exhausted, price action will stay range-bound. So how do you approach risk management in a range-bound market like this? Trade the confirmed breakout, not the inflow narrative. Institutional buying proves long-term interest, but it does not guarantee immediate price surges. Wait for a daily candle to close cleanly above $65,000 on high volume before committing new capital to long trades. That wraps up today's episode of CloseOption Trading Desk.